Chinese foreign exchange reserves are due out later today. A stable reading would suggest that the central bank continued to refrain from selling foreign currency to curb a decline in the yuan. Joining us now with thoughts on China, Douglas Morton, Head of Asia Research at Northern Trust Capital Markets. Douglas, great to have you on the programme again with us to focus on the Chinese story. What do you see? What do you expect to see in these FX reserves? Do you think that the central bank has had to spend its dollar pile, if you like, to support the Chinese currency, to stop outflows?
Yeah. No, we don't. A number of the reads that we're looking at the moment are suggesting that hot money is continuing to actually flow into China rather than coming out of China, which is very, very different from what we saw the last time the RMB had a devaluation or a depreciation.
So it's not 2015?
Not at all. It's a very, very different situation from 2015. Obviously, should that change, that's when we would become concerned on the RMB and on trade currencies. But at the moment, the initial high-velocity indicators to us is suggesting actually things are OK and the Chinese government haven't had to step in to support and actually wouldn't want to step in to support the RMB at these levels.
Douglas, very good morning to you. Look, we spend the days ruminating about whether it's going to hit 7, whether it's going to hit 7.10. Goldman Sachs has a call there at 7.10. You would maintain that maybe we are more fascinated by the machinations of the yuan than the PBOC. Why?
For the moment, I think yes. I think what the PBOC are concentrating on is this outflow argument. And obviously, a weaker RMB in general terms is positive for them, except when that then bleeds into becoming uncontrollable, and then it begins to bleed into their funding position rather than their trade position. But at the moment, I think in general the RMB is going the way they want it to go, so long as it remains controlled. So I think we're looking very, very closely not only at these foreign exchange reserves, but also treasury holdings going forward, and obviously the trade balance when that comes out also.
So control. Weakness in the currency is something they like. Uncontrolled weakness is something that they wouldn't be in favour of. Douglas, I've got a graphic here that illustrates the size of the trade imbalance, I suppose, between the United States and China. And therein lies perhaps the limitations on what China can do in terms of retaliating against the United States. When the US imposes sanctions, there are limits to how far China can go because of what President Trump has complained about over all these years, the imbalance here. So does that mean it's more important that they have the use of the currency in their armoury, or are they going to use other weapons?
I think they potentially will use other weapons because, I mean, there's only so much that they can do with the currency because, obviously, as I mentioned before, it becomes an issue of financing rather than one of trade if they go too far with the currency, and that's a big risk for the region overall. But I think when we look at sort of the trade balance, particularly with the US, interestingly, that despite the fact that we've had these tariff adjustments, although they haven't come into effect as yet, last month we saw record trade balance growth between China and the US. So the initial stages of this are doing the opposite almost. So I think the next reading will be very, very key to see whether or not that trend continues. But I think China also have the ability to look at other areas in terms of not just FDI, but US investments within China have actually been vast over the last 5 years, far more than people suggest. So China have the ability to arguably turn the screw on direct US assets held within China. And so I think potentially that may happen. And China have a history of looking at assets and getting their population to start not buying US assets.
Yeah, sort of a boycott.
Absolutely.
That's always possible.
Yeah, Douglas, one of the things we talked a little bit about the PBOC's focus on as where funds flow over the yuan. But have a look at this, because this is one-year forward rates, and we're seeing it below US rates for the first time in 9 years, which beggars the question about global. If we look at global central bank moves, Fed, BOE, BOJ, I know the RBA left it unchanged this morning. Do you think that the PBOC keeps rates unchanged and doesn't match the Fed?
It's a fascinating chart, I think, and it's something that we're watching very, very closely. For the last few years, we think not enough attention has been paid to that divergence between, for example, the Chinese 10-year and the US 10-year, which I think has underwritten a lot of these inflows that we've seen, or the predominance of inflows into China when arguably the opposite should be happening. But we have seen a convergence between those yields between China and the US in the last few months. And I think one of two things may happen on the back of that. On the first instance, on the bearish argument, we may begin to start to see these outflows because, obviously holding Chinese assets becomes less valuable to people. Or we may see sort of the demand for fixed income within China, which has been there, switch to equities.
We got to leave it there.
Sorry.
Douglas, time ran against us. Douglas Morton, the Head of Asia Research at Northern Trust Capital Markets.